The market is looking a little bit shaky right now, with many altcoins flirting with major support levels. So in today's video, I want to do my best to explain what I think is next for the altcoin market, touch on the current altcoin reckoning of sorts that we are currently seeing, with altcoins significantly underperforming Bitcoin, and also let you know when I think this could potentially turn around. Because if you just look at the charts here and you look at Bitcoin, for example, from its local top to the local bottom, it went down 18%. Comparing that to Total 3, which is the altcoin index, altcoins went down 27%, and many major altcoins are down 30, 40, 50%. Which is kind of scary in a way, right? Because all it takes is a 15, 16% move for Bitcoin to send altcoins down 30, 40, 50%. And we're not just talking about rubbish coins here. I'm talking about coins like Rune, which are down 44% for the month. AVAX, a newly launched coin, which was really hyped, which was Wormhole. Even Solana down 25%. So the market right now clearly is volatile. I do believe it's an extremely difficult market to navigate, but hopefully in today's video, I can help you navigate it. And also, I have taken some moves with my crypto portfolio, which I want to discuss at the end of the video. I'm probably alluding to it in the thumbnail of this video, but I'm going to explain exactly what I mean by that later in the video when I talk about my altcoin positioning. So the first thing I want to do is give a macroeconomic update, because Bitcoin is not operating in isolation here. We've seen some very choppy market conditions from the stock market off the back of relatively sticky inflation rates. We've also seen the market's anticipation of rate cuts rapidly change. So there is a lot of macro factors at play right now, which are creating choppy market conditions. And this is evidenced very clearly by the NASDAQ on the left and Bitcoin on the right. If you look at the price action of the stock market, so tech stocks on the left and Bitcoin on the right, it's pretty much almost mirroring each other. We saw Bitcoin put in one local top, then have a thrust to the upside before making a lower low. We saw the exact same thing in the stock market, making a local top, coming back down, making another top, and then we see stocks making another lower low. So Bitcoin's price action is really similar to the NASDAQ's price action at the moment. So as much as we love to believe that, crypto is completely decoupled from the macro environment, unfortunately, and sometimes fortunately, during market rallies, they are fairly correlated. So if you try to navigate the murky waters of crypto, you also have to pay attention to what is happening in the macro scene. So what is happening in the macro scene? Well, recently, which caused a recent market reaction over the last 24 hours, we saw prediction markets starting to show a 36% chance of zero interest rate cuts in 2024. To put this in perspective, says the KBC letter, 4 months ago, there was a 3% chance of no rate cuts in 2024. The base case has gone from 6 rate cuts to 1 rate cut this year. There is just a 31% chance of 2 or more interest rate cuts this year. In other words, there is a higher chance of no cuts than 2 or more cuts in terms of the market's prediction here on Kalshi. So why is this the case? Well, essentially the recent data that we did get in terms of both GDP and inflation alludes to both a slowing economy at the same time as relatively sticky inflation. The market doesn't love this because, of course, rate cuts is a more bullish scenario for equities and risk assets as a whole. Now the chances of rate cuts are obviously diminishing. As you can see in front of you, we have seen the market just spooked a little bit by this. And of course, you do couple this with a few other factors like the geopolitical tensions we've recently seen, earnings across a variety of major tech stocks, which will continue to be released over the next few weeks, by the way. And it kind of does paint the picture for why we are currently in a choppy period. And there is, of course, this old trope going around, which is sell in May, go away. I wanted to provide a little bit more color to this statement in today's video, as I'm seeing a lot of other creators talking about it. So if we do look at Bitcoin's price performance in May, it's true, the last 3 Mays have been significantly red. And overall, it's one of the slightly weaker months in terms of crypto performance. It's not the worst month. The worst months are definitely August. You can see is quite a weak month. You can also see that September is quite a weak month. May is in the bottom half of crypto months. But one thing interesting to point out here is that election years typically for equities have actually been very strong performing years for the month of May. And I'm not just talking about May itself here, I'm talking about the period of May to October, because sell in May, go away refers to the time period where stocks have typically underperformed during the middle months of the year compared to the months like November, December, January, February, which of course are really strong performers for crypto historically. But in election years for the stock market, we've actually seen the middle part of the year performing quite strongly. Now, due to the limited sample size on this, I wouldn't be so quick to draw any actionable conclusions from it. It's just something to keep in mind when you do see creators talking about sell in May, go away, to be aware of that election years are actually much stronger than your typical May to October period for the stock market. And yes, the stock market is relevant at the moment, as you can see in front of you, just due to the correlation we're currently seeing. Now let's talk about what happened in April for crypto to try and paint a picture for what could potentially happen next in the crypto market. Then I'm going to get into my Bitcoin chart, talk about the key levels that I'm watching and what I'm actually doing to currently position myself in the altcoin market right now. So I love this tweet from Victor, which summarizes some of the narratives in mid-April. We had a massive market dump with liquidation cascades for 2 days in a row, with $800 million in long liquidations each day, seeing Bitcoin go from 71K to 63K in just a matter of days. We saw significant dispersion, and this is what I'm alluding to here in the title and the thumbnail of the video, between Bitcoin and altcoins, since many of them had minus 50% drawdowns versus 14% for BTC. I'm going to touch on this in just a couple minutes because it's something you need to be really careful of as an altcoin investor. The last few weeks have been a reminder, just as quickly as altcoins can pump and outperform, they can also just as quickly underperform when the script actually flips in terms of Bitcoin price performance. Really important that you watch that segment later because I'm going to show you how you can avoid this trap. We also saw the second flush on April 13th happen because of the geopolitical tensions. Around half of $20 billion altcoin open interest was evaporated in 2 days. So these were just some of the events recently which have led to a slightly choppy market. And I actually did a tweet, which I think is still fairly relevant, about a week ago in the midst of all of this, where I said, look, for those who missed the dip on that initial wick down to the 60K level, it's a good lesson in buying fear and taking advantage of fear, but I don't feel like there's a rush to buy now because the next few weeks are likely to remain choppy. They have indeed remained choppy. Macro isn't fully resolved. As I alluded to before, there is still question marks about the whole interest rate cuts and the earnings and a lot of other macroeconomic factors which are currently impacting the market. And finally, it will take a moment to regain retail's trust after another brutal shakeout. This is something I don't see a lot of people touching on, but it's real. When you do see these major shakeouts in the market, it does hit the confidence, especially of retail, who would typically over-leveraged and over-risked into these major flush-outs. And what happens is those people get wrecked. They tentatively crawl back to the market in a matter of, weeks or months after the fact when the market starts pumping. But usually there's this interim period, which I believe we're currently in, where retail is just a little bit hesitant because they've just been burnt and they don't want to go touch the scorching iron again. They want to just sit back, see what happens and relax. So there's probably not that urgency from retail to long. Now, of course, if you want to take the converse argument, this can actually lead to these massive squeezes to the upside, because what happens is when the market regains confidence, retail actually piles in and a lot of people are sidelined, which leads to this additional FOMO in the market. So there definitely is that counter effect, but in the interim periods, you do tend to see these choppy market conditions after these major flush outs. And that's exactly why I said a week ago that there wasn't a rush to buy. I'll give you my current update on how I'm currently viewing buying in the altcoin market in just a minute, when we also talk about the altcoin reckoning, Bitcoin dominance, etc. Another major factor which is affecting the market at the moment are the ETF flows. So they have started to significantly stall. We've seen a couple days in a row now tick into the negative territory. Of course, one of the strongest narratives propelling Bitcoin's rally from the 30K region all the way up to the 70K region was the Bitcoin ETF. And when flows were more positive than expected, so aka the boomers were gravitating towards this ETF, people got really excited about that, and that was one of the strongest catalysts in the market. I do now think that that catalyst is exhausted. The narrative is a bit exhausted. We're not just seeing that in terms of mindshare and hype around the ETFs, but also in terms of the concrete data that we are getting in the way of these ETF fund flows just starting to tick into the red. There is a silver lining, however, in the midst of the red outflows, in the midst of some dubious macroeconomic data, we have seen Bitcoin actually still hold majorly above this 60K level, and the response around 60K has been super strong. So I'll actually chart this and give you my opinion on this setup in just a minute. And one of the things that I'm going to point out is, of course, the really strong reaction around the 60K level, which is obviously good considering we now have had one of the biggest catalysts in crypto become, at least in the short term, what some would consider to be a headwind. So what do I think of the current market and what am I doing? Firstly, let's chart Bitcoin, because a lot of the answer does lie in Bitcoin. Right now, Bitcoin is one of the most important things to keep your eye on because it really is the driver of the market. We are seeing these altcoins operate in terms of their price action on an extended risk beta versus Bitcoin price action, which they always have, but we have seen periods of outperformance. Right now, I think alts are really just waiting for a decisive move from Bitcoin. So the way I think about Bitcoin right now from a PA perspective is really simple. You have this range low on the 4-hourly and also the daily starting to form at the 60K level. You have your range high at the 72K level, which was, of course, the local top. And then you have your mid-range level at the 67K zone, which is acting as an intermediate range support / resistance zone, which we actually bounced off multiple times. And that this has resulted in the lower high actually setting in for Bitcoin here at the 67K region. So pretty much the major levels are range extremities. These are the levels that I'm most interested in trading off from a trading perspective. So anytime Bitcoin gets down to 60K, until proven wrong, this is a decent, in my opinion, risk-reward zone to accumulate BTC / alts if their pairs look strong versus Bitcoin, which we'll touch on in just a second. And any thrust up to the 72K region, until proven wrong, this would probably be a TP / short zone. I'm not a big fan of shorting during a crypto bull market, which I believe we are in a macro crypto bull market. But in terms of positioning, taking profits in this zone is never a bad idea until the range obviously is invalidated. Eventually it will be, but until then, I'm trading within these mental constraints until some of the macro side of things is resolved, either to the positive or the negative side. And of course, you do have this mid-range level at 67, which you have to be aware of. A thrust up here now and another rejection, I think, would be quite bearish. Bitcoin really does need to reclaim the 67K level to have a chance of pushing up to 70. Obviously, because I'm net long, I would prefer this move, but I'm also a realist and I accept that the price action right now is actually starting to look a little bit exhausted. And for that reason, I do think from a pure probabilistic perspective, going back down to this area here is likely, in my opinion. I also want to reference this chart that Doc posted. By the way, Doc's an amazing trader who also contributes to my private Discord. He's had some amazing setups and calls over the past few weeks and months, but he posted this chart, which I find really interesting and really summarizes how I'm viewing the market right now. You know, I've said in recent times that I think we're going to get a choppy few weeks, right? Well, Doc says here, 60K is consensus support. This is what CT thinks will happen if it's lost. So a lot of people are saying, look, if we lose 60, we're going straight down to 53. A close below is pretty much lights out for Bitcoin. And then versus what's much more likely if we lose 60, and this is a sideways chop. We break below 60, downward momentum eventually gets lost without the bids getting filled at the 53K zone, and then we squeeze back to the upside. This is price action that is much more common in the market, where the market never really gives you what you want. If we break 60, it's unlikely that people's bids are going to be filled at that next support level at 53. It's more likely that it tries to wreck both bulls and bears because shorters end up getting squeezed and bulls end up never getting their preferred entry and the bids end up going unfilled. And then, of course, the dip never comes, or the dip doesn't go deep enough, and everyone that's sidelined ends up FOMOing in higher, and then Bitcoin goes to 70, 75K. I don't know if this will exactly happen. It is just one scenario, but it pretty much does line up with my thinking of the market right now, that we could see this sideways chop. It's going to freak people out when we start to break down, if we start to break down below 60, but eventually we're going to see that squeeze to the upside, and that will end up, in hindsight, being a buying opportunity. So I'm going to ask you a question, and I really want you to answer this question in your head. If Bitcoin pulls back to 59K now keep in mind we're sitting around 64K at the time of this video, and alts, let's say, go down 20 to 30%, are you going to be panicking? Just put yourself in that scenario. You wake up in the morning, Bitcoin is now 59K, alts are down 20 to 30% because alts have been on a higher risk beta to Bitcoin. We've seen this in recent times. I pointed it out before. Alts have been drawing down a lot more when Bitcoin crashes and pumping a lot more when Bitcoin pumps. If you are really scared in that scenario, and if you genuinely think you would be worried in that situation, you're probably overexposed to the market. Now, I actually asked myself this question a couple weeks ago, and I've been tweeting about it. You can see this tweet's on April 10th. I ran through this scenario in my head, and I came to the conclusion that I would be a bit worried with a 30% drawdown in altcoins. And when I came to that conclusion, I realized I was actually a little bit overexposed. So because of that, I have been taking some profits off the table on these major pumps. I had a feeling we would get that drawdown. I did warn you about that a couple weeks ago before we ended up actually wicking down and testing 59. So it was pretty spot on with my thinking. But once we actually saw that thrust back to 66, I took profits again, went back down to 63. Today we pumped back to 65. I took some profits again. I'm just trying to be a little bit cautious here to hedge against that scenario. Now, I don't know if Bitcoin is going to go down to 58. I don't know if it'll go to 55. I don't know if altcoins will necessarily crash. It could do the opposite. It could pump. But I'm just trying to be prepared for that scenario, because the worst thing is going into the market unprepared for an eventuality which isn't unlikely. It's not unlikely that Bitcoin goes down and tests 60 again. In fact, it's a logical stepping point. If you do look at the charts here, and we can clearly identify that is the range low region. So if you are worried at the thought of this dip, what I would do is I would make sure you're not overexposed to the market. And if you are exposed, I would make sure your portfolio is constructed in such a way that you're in the strength, you're in the right coins, and you're not in trash. Now is not the time to be sitting in trash. It's actually quite a difficult period to navigate from a shorter term perspective. Longer term, it does become simpler. My strategy is to buy quality altcoins from strong narratives that I believe in and where I have a strong thesis developed on extreme red days. Generally speaking, I can do that and sleep at night. But in terms of navigating portfolio management in the short term, it does become a slightly difficult period to navigate. I'm going to give you a little bit of alpha that I shared in my Discord. This is my private community where I give quick updates to everyone that's in there. I said, remember, there's no need to force a trade if there isn't an obvious one. This is the easiest way to get wrecked in the market. A weak thesis with low conviction is unlikely to hold up in a choppy market in terms of your psychological ability to hold. That point's really important, by the way. So let's say Bitcoin does go to 59, some altcoins go down 20, 30%. If you don't have a strong underlying thesis / conviction in why you're holding that altcoin, it's probably going to be pretty hard for you to diamond hand that through a time of adversity if you don't even really understand it. So that's why I said before, just make sure you're in the coins you actually understand and have a strong thesis behind its narrative. Otherwise, it's going to be really hard for you to not only hold through times of adversity, but actually accumulate more, which is theoretically what you should be doing. Of course, this video is not financial advice during these major market corrections. So right now, my focuses are on scalping coins that are obeying market structure. In the Discord, we took a short position on HBAR, which made us 150%. Also a long on TON, which made us 90%, which was great. So these are the kind of scalps that I'm executing at the moment when the market's boring, just for a bit of adrenaline, but also just to keep some stable coins rotating. Accumulating strong coins on high time frame support. These opportunities are sparing. I'll get into a couple in just a second here, but they do present. And the other thing I'm doing, which is super important, is researching and digging into new ecosystems. So this is actually a time where let's say we do see choppy conditions for the next few weeks. This is actually great. It's a gift. In the peak of the bull run, it becomes very hard to stay focused in the market because of the euphoria, because of the dopamine, because of the FOMO. In lulls, in more boring periods and choppy periods, this gives you an opportunity to catch up on stuff and sharpen your tools. So I've been researching the TON ecosystem. I didn't really understand Runes and Athena properly, but they are major market trends, so I was understanding them a little bit better, come to some conclusions there. And the other thing I was doing is getting into NFTs and learning more about NFTs. One thing I actually talked about in my Discord was how I was buying apes and pudgies. This was on the 24th of April, just 2 days ago. And if you look at the price of apes and pudgies today, apes are actually up 50% this week, 26% today. They went from 11 ETH to 17 ETH. So I made, I think, a 5 ETH profit on one of my apes, but I didn't have time to accumulate enough. I really wanted to accumulate more, and if they do end up going back down again, I am going to buy a few more, and I'll do a video on why I'm actually doing that. Same as Pudgy, same as some of these other Ethereum major collections. That is a story for another day, but this is just another example of, something that I called in the Discord, and I had success trading that. Obviously, with NFTs, there is a barrier to entry though, so depending on, the capital that you're trading with, you might have to go down the risk curve a little bit. So basically, the TLDR there is that boring/sideways periods in the market are the best time to hone your skills in the market. So the reason I did end up taking some profits, to summarize this tangent here, is essentially I felt like I was overexposed because I accepted that if the market does go down to 59, I'd be a little annoyed about that. And you really shouldn't have any emotion in this market. If you do, it's probably because your risk management isn't slightly tweaked. So I do enjoy playing these thought experiments to help myself handle my risk parameters a little bit better. So when the market does come down, when we do get these major dips, and even now, right? What should you be doing? Should you be buying? Should you be selling? Here's the thing. When I talk about protecting positions, I'm talking about the short term. If you're overexposed, that's something you definitely have to take into consideration. If you have adequate stablecoin weighting set aside, the lower we go, the better risk reward entries you're going to get for the rest of this bull run. And for that reason, I don't think scaling into quality alts, even now, if you want exposure to them, and maybe they'll drop a little bit, it's not a terrible idea as long as you're measured with how you DCA into the market. But right now, I believe it's not the time to just DCA into any random old crap. You really have to be selective right now. And there are a few outliers if you look at the strength, which is showing signs that they're stronger than the rest of the market. Funnily, a lot of these strong coins are actually the meme coins. I did a video yesterday, I'll link it in the description below, about why I think meme coins are here to stay this cycle and some of my top picks for meme coins right now and my strategy for accumulating them. But I recommend watching that. I put this video out and afterwards, a lot of the memes actually outperformed. If you look over the last 24 hours, a lot of coins are down 5, 10, 15%, but meme coins are actually up with had a nice rally, etc. So narrative-wise, that video was spot on. Another thing you can do yourself is go into Velo. People do ask me, Miles, how do I access Velo? For your convenience, I'll leave a link in the description below to Velo data. If you don't use it, it's one of the best websites in crypto. If you go into the top gainers section, or if you sort by large, mid, or small caps, you can see what the strongest altcoins are. So you can see Bonk's performing well, ATA is performing well, High's performing well. If you go into large caps, so to cut out some of those outliers, you can see HBAR. You'd have to look into it though, because the reason HBAR pumped is because of this fake news, and then we actually shorted in the Discord and it went down again. Nia Protocol performing very well. Obviously, it has ties to AI, SHIB, BNB, STX, Link is RWA related. STX is Bitcoin beta related around the halving. So there are reasons why some of these are outperforming, and that's definitely a tip for you to look into the coins with the relative strength. Other narratives which I think could be strong performers in the midst of what's a choppy market over the coming weeks are potentially narratives like AI. I think RWA is here to stay. AI as well though, because you've got the Nvidia earnings, you've got ChatGPT 5 being released soon. It has this real life news flow and catalyst in the market which can trigger sector outperformance, and that's what you're looking for at the moment. Now, I did say earlier in the video, stick around for something, and what I was alluding to is this strategy that I'm using in terms of looking at altcoins versus BTC. So on the thumbnail / title of this video, I'm alluding to altcoin underperformance versus Bitcoin. You should only be buying altcoins right now, or even considering buying altcoins right now, which are in uptrends or at major support levels versus Bitcoin. I'm going to firstly show you example of altcoins which are weak and setups you should be avoiding. Filecoin versus Bitcoin, looking extremely weak, making lower lows on the daily versus Bitcoin. Cardano, looking very weak versus Bitcoin. When you see these setups where coins are making lower lows, these are generally coins to avoid. What you want to look for is a confirmed reversal. So on Cardano here, you want to look for this SR flip, a thrust of this major level, in this case the 0.8 zone, and then a push to the upside, and it's on this retest here that you can look to position. Your goal as an investor in the market is to beat Bitcoin. You're not just trading to make dollars, you're also trading to make more Bitcoin, but outperform Bitcoin. Because if you're not outperforming Bitcoin, what are you doing in the altcoin market? You shouldn't be in alts at all. Otherwise, you could just buy Bitcoin, hodl, and get some sleep at night and not have to worry about any of this stuff, right? So whenever I approach a trade, I always want to make sure I'm actually going to beat Bitcoin. So would I buy ADA right now? No. Would I buy Filecoin right now? No, because they look trash versus Bitcoin. Conversely, and I'm just giving random examples here, there are more. Phantom is in an uptrend versus Bitcoin. The other thing I mentioned before is buying support. Link, interestingly, is at support versus Bitcoin. And it has shown a bounce at this level. So it's these kind of setups, and you can go through every alt. What I recommend on TradingView is make a watch list of altcoin pairs versus Bitcoin and go through and work out what coins are actually looking good versus Bitcoin. Or at least use it as a reference point if you are going to buy a coin. Compare it to Bitcoin, right? Because as I said before, a lot of alts are getting smashed when Bitcoin moves. They're operating on this higher risk frequency. So you really got to make sure you're getting into an alt with relative strength. DOT looks weak versus Bitcoin. Gala, it looks okay. It has had a rebound. It actually isn't an uptrend. It made a higher low. NIA, I think it's looking good versus Bitcoin. Very good. This is a perfect example of a very bullish trend. So you see this trend here. It has a pump. It consolidates. It has a pump, it consolidates. It has a pump, and it keeps making higher highs and higher lows. Structure like this step ladder type market structure is generally really positive when we're looking at not only USD price performance, but also the Bitcoin comparison as well. So just to summarize my advice here, if you're overexposed, make sure you're prepared and make sure you have enough stablecoins on the side. And that's why on pumps, I always recommend taking some profits so you can actually capitalize if we do end up going back down to that 60K region, because it is on the cards. And I'm not just going to lie to you and say, oh, no, it's going to be up only. Market always doesn't give you exactly what you want. Similarly, if you do want that major correction to 53, it's probably not going to give you that either. It tends to give the market what it doesn't want, and it'll do its best to shake you out. If you are adequately exposed to stablecoins and you're comfortable in your risk weightings, you can start averaging into the market, but only do it with coins that are showing strength against Bitcoin and also strength in the market versus other altcoin sectors. So make sure it's from a strong narrative with strong catalyst. Make sure you believe and understand the thesis behind it, and make sure it's showing relative strength. So the thesis is actually reflected in the price action. But most importantly, make sure you have conviction in those coins, right? And that's pretty much all I would like to summarize in terms of the altcoin market today. Hopefully there was some value in here which can help you navigate the next few weeks. I'm not ultra bearish. I'm just cautious. I mean, I'm bullish from a more macro perspective. I just don't want people getting rinsed before the fun even begins, because this is the thing. The market will try and do its best to chop you out. You've really got to survive these periods of uncertainty, of lulls, of apathy, because these are the periods that actually harden you and can oftentimes be the periods where you set yourself up for the biggest gains in the market. So don't just treat it as a period to dismiss the market. Treat it as a period of growth as well. I'll see you in the next one. Have a lovely rest of your day. Peace out.